Hello and welcome to another trades and tutorials video from the Little Big View section of MarketGauge.com. If you're watching this on YouTube, then make sure to subscribe to our channel. So before I get started, let me just make sure you know how to find us quickly and also you know how to get the video in HD. So first of all, if you're not already watching this on our website, the way you navigate to it from our website is go to Resources, Little Big View. That'll take you to a page that has this menu right here. We're at Trades and Tutorials. Shortcut is www.marketgauge.com/tutorials. Now, if you want to see the video in HD, once you start playing it, you will see a little settings icon right here. And if you click on that, you then have the option to select HD. And you will have to stop it or pause it and restart it. But when you do that, you'll see you'll be watching in HD. It's a lot clearer. I think you'll like it. Hope that helps. And let's get on with the video. Today's video is going to focus on a couple of different patterns that have driven the market over the last 6 days. And this is a recurring pattern, a couple of recurring patterns that really every trader should know. Now, if you're a member of either AM Trader or Opening Range Success Formula, this should be a review for you. We've talked about these types of patterns before. If you're not a member, then check out AM Trader under our education section in MarketGauge.com, and you'll find these types of instructional videos all the time. So what we're talking about here is a big update driven by the Fed. So the market was somewhat caught by surprise, and I say that because of the price action. For no other reason, not because of the news. The price action tells you that the market was somewhat caught by surprise. But how surprised was it? Was it surprised enough to really change the direction of the correction and take us out to a new high? Well, you don't really know that until you box in that day. So when you have a really big Fed day or a really high volume Fed day, in this case, I don't have the volume here. The volume was pretty good, but the range was really good. You want to see the market follow through. This high and low of this day are going to be very important for the near future, not just that particular day. And what really drove me to make this video was watching the market yesterday, which was this day. I'm doing this in the morning, and just realizing that as the market's getting higher, this is where it's going to have trouble, because that's the low of the Fed day and other things. But when we look at the intraday action, you're going to see this is no surprise that it stopped up here. And let's just take a quick look at the other market. So QQQ. Also, I put in these blue lines to demark the daily high and low. QQQ didn't get all the way up, but as I'm going to show you in a minute, from the high point of view, this market broke out, but once it broke down below on a closing basis, it was never able to get back above it. And there's another pattern in here. If you're Slingshot members, you should be picking up on, and I'll get to that in a second. So IWMs, it breaks out. It should have held when it came back to this level. Yesterday, when it rallied, it stopped, almost dead at that level. So these are really important levels to know. All right, and it's that straightforward. It's a particular day. You got to mark it, and you got to watch the price action around it. Now, there's another pattern in here. Again, if you're a Slingshot member, you should recognize this. That's this inside day. Now, if you get an inside day near a significant breakout level, and this is after a significant breakout level, this high and low is also going to be a very significant level. So the fact that this was the high really reinforced that this should have been support, and this would also be support too. And you take both of those out, you're most likely going to get something along the lines of what we just saw. Okay, should not have been a surprise once we started breaking it, and when we look at the intraday action, you're going to see the same thing. So now let's go back and take a look. We'll just kind of rewind. Here are the cues. Now look at the inside day. Okay, inside day low. No surprise, all right? This particular level, no surprise here, right? That this would not only serve as support on this day, but basically on this day, unable to close above it on this day. Really key level, completely projected by the fact that you've got that inside day lining up at that level. All right. Look, not to mention that the inside day's high was the high of the Fed day, right? Getting back to my first point. And once you break this level, it's an elevator shaft down, right? Now let's go take a look at the SPYs just to complete the daily view of this, all right? So here's the SPYs inside day high. Now, does anybody want to tell me that that wasn't a significant level? Okay. And how about that? All right. That's a level you definitely want to be aware of. Okay. So it breaks on a closing basis here. That's a major warning sign. When the next day it tries to go a little bit higher, can't, and goes below, should be no surprise that you get a big down day. All right. Now I could stop there on the daily chart and say, look, that's all you need to know. But let's go in just a little deeper for those of you who are focused on the opening range and see how this played out on an intraday basis. So I have the same lines drawn on the 5-minute chart, and the high and the low, the opening range, 30-minute opening range, is in the green and red. And so the big fat blue line is the daily high of the Fed day, and the dotted line is the inside day. And so let's just look at how when you put these together with the opening range, you've got a huge, huge leg up on understanding what's going on in the market. All right, so first of all, the SPYs and the big warning, the big picture warning here, which I don't know if I made totally clear, is remember the SPYs, if we're looking at the three, and I'd look at the Dow too, but it will agree with this analysis, so I'm trying to keep the video more concise. The SPYs never take out their Fed day high. If the market's going to continue higher, all the markets have to be in sync. You really want to see Dow, S&P, NASDAQ, and Russell 2000 all in sync. Well, the SPYs, as I did not take out the high, and I just showed you on the daily chart that the Qs and the IWMs did. So when the SPYs start rolling over, never having broken out, and the Qs and the IWMs start breaking their high, that's a huge warning sign. So the next area you're going to look is, in this case, you've got this inside day high here that now you can see how it played out intraday, right? So opening range reversal. So we move down, right, here. Not sure where the pivots are, but you know you've got the pivots now moving down. Opening range reversal with this particular level being the high of the day for the opening range reversal. There's a great candidate for that opening range reversal trade, right? So what's the next level on a big picture you're going to focus on? We're already eating into that inside day. You don't want to see it break the low of that inside day. So now again, you've moved down and you now have an opening range breakdown below the inside day low in an environment where the next big level is way down here, which, as you can see, is exactly where the SPYs stop to hang out before the final push at the end of the day. So this is that low of the Fed day. This is the low of the inside day, and here's your opening range breakdown. Okay? If you're looking for these patterns, they should jump right out at you. Now, let's just take a quick look at yesterday. We didn't get quite all the way up to this blue bar, but as we got closer and closer to that low, you got to realize that this is a really important swing level. And when we look at the intraday action going forward, we want to see it take out this 207 and change here, and then we'll be back inside this day. But if you want to play the market pretty conservatively right now to be conservative about when you decide it may turn back up, you can just wait for the SPYs to have to get back over this 207 level convincingly. All right. Until then, you've got a roof on the market created by this Fed day. let's take a look at the Qs. So same patterns, right? Same demarcations. Here's the high of the Fed day. The dotted line are the range of the inside day, and you can see same thing. Now we saw this in the daily chart. It held, it held, it held, it held, it held. When it finally broke, and you have an opening, range breakdown at the end of the day, not something you're likely to trade. If you're trading a 5-minute opening range, you've got a 5-minute opening range breakdown right lining up with the inside day low. It was a quick drop. Here's your 30-minute, the slower pace. Same pattern as the S&Ps. The OR low is below the inside day low. And as soon as that breaks, kerplunk, it stops right at the Fed day low before making a new push down. All right, now let's take a look at the IWM. So even though, hopefully the point here is that even though there's slightly different patterns on the daily chart, the levels for each of these respective charts were all like talking to you in unison. All right, so here's the high. This is the strongest chart, remember? Here's the high of the Fed day and the inside day. You can see that in the first half hour, the market kind of consolidates, looking like it's trying to hold it. But you know, how many times have I said, once you break an important high of the day, you got to be able to get back up above it. So the fact that it could not get back above this important level and then gives you an opening range breakdown and opening range breakdown and correction to the opening range breakdown and correction to the opening range low, and then a new leg down. Look, you had to know that at this point, when it breaks the inside day, and at the same point, the other two markets are breaking their inside day, that it's pretty much elevator shaft down. And again, it held just above this level, actually paused at the level exactly before that last leg down. And then yesterday, as it's rallying up, stops right here. Now, I would not have been surprised if it had gotten all the way back up here, given the fact that the market pretty much defined this level as the level it was respecting with respect to this low. Okay, so again, IWMs, when do they turn? When you can be more convinced that they turn? They get back up over this level. All right, so this is a pattern that happens over and over and over. If you have a big Fed day, then pay attention to it, not just the day of the Fed, but for as long as those levels continue to play out. You can keep it this simple. It's really powerful. I hope that helped. And if you're not already a free member of Market Gauge, get on over to the Little Big View section, and you can be sure to get videos like this and more, all for free on a regular basis. See you in the next video.